All right. Cool. Well, thank you, Alex.
Pleasure.
We're here for this episode talking about Bitcoin, and met Alex the other night at dinner, and was super interested and learned a lot from what he was sharing, and just thought he'd be a great guest to bring on to the podcast here today. So maybe just kind of give people a bit of your background, your story, where you're from, how you got involved in it, and
Sure.
kind of go from there.
Sure. I guess I got involved in Bitcoin around late 2013, like quite a lot of people did. It had been having this amazing bull run. The price went from like maybe $30, I believe, early 2013, and rose to about $1,200 by the end of the year. And so that caught a lot of attention, got quite a bit of media coverage, and so that's pretty much how I came to learn about it. And I didn't know much back then. I was just chasing money, I guess, and looking for a quick way to invest. And I guess I got I got burned early on by the greed. I bought my first coin at maybe about $1,000, which then the price sequentially dropped for about 2 years, down to somewhere near $200 US, 250. But I guess holding the coins gave me some motivation to learn more about my investment, and I just got sucked in the rabbit hole. Really, it is quite an interesting proposition. It's a technology that has the potential to change the lives of everyone. And it has like the proposition that we could move away from typical fiat nation-state currencies for a global standard of value, which Bitcoin provides, and one that is decentralized and not controlled by any government or central authority, is quite appealing. And so I guess I read most of everything that you can possibly read about Bitcoin during those years. I started getting involved with the community on social medias, on forums, and all that. And
now that's one of your jobs. You're working with the company. So
that's
maybe
correct.
You kind of talk about the company and kind of how you got involved with that. And just kind of the one thing that you mentioned that was really interesting is when you were down at a conference in San Francisco, was it?
I was in Milan, actually. Yeah.
Oh, Milan.
Yeah.
Okay.
So yeah, the company I work for is called Blockstream. They're certainly one of the major players in the Bitcoin industry.
Yeah.
They have hired some of the most knowledgeable technical people in the ecosystem. They're building enterprise solutions, business solutions for financial infrastructure that leverages Bitcoin's technology, that is compatible with Bitcoin's technology. They are basically called side chains, and so they provide a more open and sort of flexible platform to deploy commercial solutions, because Bitcoin does one thing really great, which is money, but the protocol being what it is, and it is sort of limited in its applications. The parallel that what people will always make is that it's kind of a bit similar to the internet, in that there is this base protocol layer, which is TCP/IP, which is how packets of information are transmitted all over the world. But since the early days of the internet, the entire infrastructure of the internet sort of abstracted this complexity by building applications on top of it. So
Let's maybe, for people that are watching and maybe not familiar with what Bitcoin actually is, maybe just break it down. Like, what exactly is Bitcoin?
Yeah.
For people that have heard about it, but they don't really know the actual basics of it.
Sure. It's always a little hard to make a short introduction to such a complex technology, but essentially it is digital money. It is a form of currency that is only governed by people running peer-to-peer software, open source software on their computer, and the protocol sort of dictates certain rules that people have to abide to if they want to voluntarily participate in the system. And so initially it was started in around, so the actual software was released in 2009 by some guy or maybe a group of people called Satoshi Nakamoto.
It sounds Japanese.
It sounds Japanese. The thing is that no one actually knows who that person is, who these people are. And so it was sort of developed probably by them during the financial crisis of 2008, and as a potential alternative to these systems that had just proven that they were not reliable and that they could break down anytime. And like the concept of digital money or sort of a global standard of value had been thought of for decades before. The problem with most of the attempts that were made is that they were centrally managed. And once they were able to get some traction, government clamped down on them.
Sure.
And so there needed to be a decentralized alternative, one that did not rely on central servers to manage. And so this is one good analogy is kind of like our governments initially were able to shut down Napster.
I remember, Napster, right?
The music file sharing service, because that was centralized, and then decentralized alternatives came along, and of course the most known one being torrents.
Yeah, right.
And so the same has happened with Bitcoin. Bitcoin is sort of like most people know about it through also the blockchain.
Yeah.
Now, what the blockchain is essentially the historical records of transactions that have happened in the network. So what Bitcoin proposes to do is to solve what is referred to as the double spend problem. So now the double spend problem is how, because the files are essentially, because Bitcoins are essentially digital, how can I prove that the money I'm trying to send to you, I haven't copied and sent to someone else, right? And so in order to do that, you need someone to track the books of the accounting books, really, of every single unit of currency within the system and their history, so that when I send you a transaction and I send you Bitcoins, it gets recorded into the blockchain, and that blockchain is distributed, and there's a copy of the blockchain on every computer running the Bitcoin software all over the world.
Wow.
So there's amazing redundancy there, and it's also secured by a kind of more complex process, which is called mining.
That's what I was going to ask you about next.
Yeah.
Everyone associates Bitcoin with these super computers that are just necessary to mine it.
Absolutely.
And regulate it.
Yeah, well, in the early beginnings, it was actually feasible to just mine and straight from your laptop.
Yeah.
Because what mining does is it's essentially a lottery for the chance to add a block of transactions to the blockchain. And to incentivize people to participate and contribute their the computational resources of their computers to secure the network. Every time you add a block to the chain, you get rewarded by Bitcoins. Initially, it was 50 Bitcoins, and now nowadays it is 12.5. This reward halves every 4 years. And so, but nowadays, because of course the price of Bitcoin has increased quite a lot, it has become an extremely competitive industry. Most of the major players have specifically designed silicon chips, which are called ASICs. So they're not exactly computers, because what they do is they run only one algorithm, and they run it in parallel 24/7. And what they're essentially trying to do is find the solution to the lottery, so that they get to get the reward. Now, your chances to win this lottery and add the block yourself to the chain is dependent on the percentage of computer power that you contribute to the network. So if you have 25% of the computational power of the network, then you have this 25% chance of winning. It is a bit random as well, so it's not exactly, it's not precisely what's happening, but just to give an overall view. And so nowadays, the computational power of the Bitcoin network surpasses any. Well, you know, we were saying maybe 3 years ago that it surpassed the top 500 supercomputers in the world combined together. But nowadays, it's easily 10 times that.
So that's crazy. That's just mind-boggling, actually. For the average person that's kind of looking at diversifying their investment portfolio, how could somebody get started in Bitcoin and get involved in the community, I should say?
Yeah, it depends a lot on whereabouts you are in the world. Canada, America. There are some brokerage websites essentially that you can use to kind of like an E-Trade account or something like this, where you will register. They'll ask quite a bit of information.
Yeah, you mentioned that at dinner the other day.
Because they have to deal with pretty strict regulations in terms of anti-money laundering, know your customer laws. But once you're done through that process, you essentially wire money from your bank account to your online brokerage account, and then you can purchase Bitcoins. I guess in the US, the easiest platform for people to use would either be, it would probably be Coinbase, Coinbase.com. I'm not a big fan of them, but unfortunately, because of the strict requirements of companies in terms of investment to comply with these regulations, there is a lack of competition in the system. I mean, your money is kind of in terms of sending your money there. There's no problem. It's fairly safe. What I would advise people to do, though, is not to keep their Bitcoins in there, because you want to leverage the full potential of Bitcoin and the kind of independence that it provides. And when you keep your Bitcoins on these websites, you are essentially dependent on them securing it. If they potentially get hacked or something,
that's what I was going to ask as well. What's the likelihood of some group of hackers coming in and just wiping the system or hacking everyone's account?
Well, the system on its own is fairly resilient. I mean, people often mention that essentially Bitcoin is like the largest bounty for computer security in the world. Like if you're able to, if you think you might be able to compromise the system, there's about $16 billion of value at stake.
16 billion.
That's the market cap of Bitcoin.
16 billion
overall. And so the system on its own is very resilient. It has received many years of peer review from top technologists. Although the problem is the third parties you rely on. For example, Coinbase being one, because the essential value proposition of Bitcoin is that you can cut off these third parties. You don't have to rely on banks anymore. You can take control of your own money, but that implies having your own wallet software.
Yeah.
Nowadays, for people who are maybe less initiated, there are a couple of alternatives to use in terms of wallet. You can get that on your cell phone. For example, one is called one that is built by the company I work for is called Green Address, and they also so there's the Green Address app. There's also the Green Bits app.
Maybe you can say the name. What's the name of the company you work for?
Blockstream.
Blockstream. Oh yeah, you mentioned that earlier.
Blockstream. But Green Address is more of a consumer product, whereas what Blockstream are doing is more commercially focused. But Green Address is one. I guess people could also use Mycelium, Bread Wallet also, and so essentially, what you would be doing is buy your Bitcoins through Coinbase, and then you transfer your Bitcoins to that wallet that you've downloaded. And so that you do not have to rely on Coinbase for your security.
My other question was, that really got my interest, going back to the conference you went to in Milan, where a lot of heavy hitters and influencers and smart people from Silicon Valley have put a lot of money from cash into Bitcoin. And just maybe speak to that, the numbers that people were really, investing. And just when I heard that, it's kind of, you want to follow the smart money. And when people in the know are moving their money out of cash into other alternatives, that's what got me interested.
Sure. After the 2013 bubble, if one could say, this is when the ecosystem started moving really fast. And so in between early 2014 and by the end of maybe 2015, we had seen somewhere around $1 billion of venture capitalist money being invested in Bitcoin infrastructure, Bitcoin companies, and also most likely part of the 2013 bubble was fueled by Silicon Valley investors. The word got around. A couple of early guys had made good returns, and so these are people who are willing to take risks. It was still a pretty big risk to invest in Bitcoin back then, but for them, that's
paid off.
That's paid off, and the potential to pay off furthermore is still quite there.
So the other thing was your speculation was quite substantial. Where you think it's going to go?
Yeah, well, I'm huge. I guess huge Bitcoin bull. I think it has the potential to replace historically the role that gold has had in our economies, where gold was always this hedge against financial disasters. It's been here in human society for thousands of years. It has always been used whenever governments or nation states would fail their people in their management of the economy. People would return to gold as the store of value because gold is a fairly limited supply. They can only dig up so much out of the ground every year, and it is the fact that is predictable. It makes it very over a long period of time, a fairly good store of value. People used to say that 500 years back, you could buy a suit with 1 ounce of gold, which remains true to this day. Compared to fiat currencies, whereas the purchasing power of fiat currencies with inflation devalues quite a bit with time. And so gold, though, has become sort of obsolete in our times of electronic information in our digital world. And Bitcoin has some of the same properties that gold has. It is scarce. It is you can easily verify the legitimacy of the Bitcoin you're receiving through the network, and it is also divisible. So one Bitcoin could be split into many different pieces which you could use for smaller payments and whatnot. And now, if you're looking at it from an investment thesis, and if you only take the use case of this for value of gold, well, it took quite a bit of time, but nowadays the market cap of gold somewhere in the trillions, 4 or 5 trillions, and Bitcoin is only, like I said, at $16 billion. So if you believe that increasingly people are going to make this comparison, are going to see the parallels between the two, and they are already seeing it. Even mainstream media coverage nowadays will often mention that for more speculative investors, Bitcoin has turned into this uncorrelated asset that does not move with the traditional financial markets, and so provides sort of this hedge against downtimes or financial disasters and whatnot. And so if some of that money that goes into gold as an investment funnels back into Bitcoin, say we pick a random number of 1% of this $6 trillion market cap, then you're looking at something around maybe $30,000 per Bitcoin. Today it is at $1,000.
So that's the number that really jumped out at me the other night at dinner when you said a $30,000 coin. And I was just like, and then you said, like you mentioned, to break it down, it's like kind of like nickels, dimes, quarters, similar, to sell it off or make other purchases, breaking it down. So the fact that you can buy one full Bitcoin now for about 1,000, and the potential is to 300 or 30,000.
Yeah, and that's a conservative. To be honest, it's quite a bit of a conservative estimate because you're only looking at one use case. And I think I mentioned to you that another you could look at is sort of the offshore banking economy, where people store their cash in offshore bank accounts in Panama, Delaware, in the United States, and they do that to protect it essentially from taxation and some of these things, or confiscation, arbitrary confiscation by governments, and so that type of money is also, we're talking also about other many trillions of dollars. And
would you say that there's any other, like we're here in the Philippines and you bought land back how long ago here?
That's 3 years ago.
3 years ago. And this week I'm just looking at getting bought here as well. And I was looking at the potential for gains in the next 5, 10, 15 years here. But that comes nowhere close to what, $20,000 of Bitcoin could achieve with $20,000 of land here. It's just not even close. So that's why after dinner I was kind of rethinking, I'm like, should I get land here or put all this into, Bitcoin and roll the dice, as they say?
I would say it's much safer to. If you go about it the right way, it's safer to get a piece of land here. But that's also, so the risk that comes with Bitcoin is also why there are potentially enormous returns. For myself, I guess
you went all in.
Right? I went all in, and I guess purchasing the land here was also part of my diversification strategy. I don't put much money into stocks or bonds or or anything else like this because, well, the way I think about it is that I'm essentially betting on Bitcoin winning because the financial system of today is not solid enough or sustainable long term.
Right.
And so it would make sense for me to diversify into something that I think has quite a bit less chances of returns in terms of traditional financial markets. So I always sort of hesitate to sell people too much on Bitcoin.
No, we talked a lot at dinner, and it made sense. A lot of the points you were saying. And do you think, another question I wanted to ask you was, with smartphones, digital pay, Apple is looking at rolling out Apple Pay. Google has something that they've got coming out. Do you think that Bitcoin will participate in smartphone?
Absolutely. I think that's obviously where the sort of end game is. And Bitcoin as a digital equivalent of cash is really not the same as these payment systems. So Bitcoin could actually find its way into these payment systems because Bitcoin is really the currency. And so you could see Bitcoin get adopted as just another currency like US dollars, euros, and whatnot into Apple Pay or the equivalent that Samsung also has going. So there's not really much of a competition from them because they're leveraging the technology that we have available today, but they're still centralized systems. So kind of like PayPal or these type of stuffs. If they don't like the type of business that you're in, or if you have concerns about your privacy potentially being leaked by, we've seen too many now occurrence examples of huge technology companies being hacked with their entire database of clients and whatnot being leaked. So this is a concern for the future. I think people are kind of lenient towards that. They don't see what the big deal could be. But there is quite a bit of nightmare scenario that you could see happen with these type of privacy leak. So that's a bit of a concern. Now, in terms of Bitcoin fulfilling this this commercial application of payments, ubiquitous payments in shops and retail in the retail game, it is not quite ready yet because we're still that requires a lot of liquidity in the system.
What kind of time frame do you see that rolling out?
I think it will take maybe at least. I think it will take maybe at least a decade for that use case to really like catch on and be hugely popular. Because to be fair, most of the Western world have pretty good options in terms of handling their retail payments. Like you said, I can use Apple Pay and it works well. I can use my debit card. That's not really. There's not much of an issue for us or incentive, to adopt Bitcoin as a retail payment system. And also, to me, even economically speaking, it doesn't quite make much sense to try to spend your Bitcoins today because if
you're holding on to yours.
Absolutely,
like
I'm hoarding
locked away.
I'm hoarding them.
Hoarding for a rainy day.
Yeah, well, because if you look at the historical returns and if you believe that there's potential for more returns, you're much better just keep sitting on them.
No, absolutely.
And then because in 2013, after the huge bubble, there was quite a bit of this narrative of Bitcoin being adopted by companies, mainstream companies, to accept as payments. So you saw huge companies like Dell, like Expedia, and a couple of others that they went along with it. They decided to accept Bitcoin as this new form of payment.
Yeah.
And that got some buzz for a couple of months, but it really just it died down, and they didn't get the traction that I guess maybe they expected, because most, if you look, and like I said, you can look at all of Bitcoins in circulation, right? And you can see that at least 50% of them have barely moved for years, because people are just sitting on them. Like you were saying, they're such a scarce thing that there's 21 million of them now. Of course, you can get smaller units, but we're about 8 billion of people.
21 million, yeah, that's not much.
So that's not much to go around.
Will there be a way to create more?
No, that's one of the strong tenets of this system, is that it eventually it is mathematically limited by the protocol, so that the issuance, like I said, it halves every 4 years. And so right now, today is 12.5. In 2020, it will have down to I guess 6.25 until there's until they're printing only fractions almost of Bitcoins.
Right. Wow.
And that will, I think, the end of the issuance period is somewhere in 2,100 something.
Okay.
But most right now, something like 75% of the Bitcoins that will ever be in circulation are already issued.
Accounted for.
Exactly.
So it's been out for under 10 years, and already 75% are off the market, are spoken for, already invested.
Yep.
And looking at your game plan, at what price are you going to say, all right, ka-ching, I'm out?
I'm most likely never going to be out, because if you, like, I'm certainly going to probably take some profits eventually.
Yeah.
That probably won't be before some like $5,000. But the
5,000 per Bitcoin.
5,000 per Bitcoin, yeah. But really, the proposition is that it will sort of replace any form of currencies as the most trusted one,
Yeah.
and so there would be no reason. There's always this meme going around in the Bitcoin community, which is like Leo asking Morpheus some like. And Morpheus is like saying to them, like, when Bitcoin gets so high, you're not going to have to sell them. You know, anyway. He's just making the point that at one point it won't make sense to go back to US dollars.
Right, yeah.
And
Yeah,
so
right.
you'll be at that point. You'll be using your Bitcoins directly to make payments,
Right.
and whatnot. Along the way, it makes sense to take some profits, but as a way to maybe reinvest in something else, or for example, help with the construction of the project I have going here.
Yeah.
But otherwise, I mean, why would I want to sit on thousands of dollars of thousands of US dollars when they're not returning me anything?
Yeah.
Nowadays, the interest in terms of savings in your bank account is nothing,
Yeah.
And so you much rather have them in Bitcoins. It's volatile. It sometimes goes, like lately, it's been going up to 1,100, and then there's some news out of China about Chinese regulators sort of clamping down on Bitcoin exchanges to some way. It drops $100 in a day. So there's these type of moves where, like, unless you have a really long-term view, you're going to get jittery a little bit about your investment. But you can't really look at it day to day. Well, I look at the price day to day, but as a casual investors, you don't have to be concerned about this.
Yeah.
If you want to get into this, you're really playing the
long game.
The long game. Yeah.
So let me ask you to close here. If someone had, let's say, $100,000 saved up, they've been working, they've got 100 grand, and now they're looking to get into the not just Bitcoin game, just investment game.
Right.
So if someone has $100,000, what would you say is the smartest move for not only returns but also safety? You know, you can talk about real estate, gold, Bitcoin. You know, how would you kind of break that down?
Yeah. I would probably, it would be the responsible thing to advise people to look and diversify a little bit. I'm not necessarily a huge, it depends on the location. I'm not necessarily a huge fan of real estate, especially in the US and in Canada.
Yeah.
I think these are markets that are still somehow, or, well, the big returns that that existed back in the days are not quite possible anymore, and so
that's why you come to a place like this.
That's why you come to a place, a third world country, or somewhere exotic where you might have better investment opportunities.
Yeah.
Now I'm trying to keep Shargal a little quiet, so but no, there are many other places in the Philippines as well that are getting pretty interesting. So that's really one thing to look at. Otherwise, my money's on Bitcoin.
Yeah, all in.
All in.
So you wouldn't go anywhere in gold, silver, stocks. Just go all in on Bitcoin.
I don't see. Well, it would make sense to. There are some good indexed investment that you can make in terms of stocks on your own. Which will return to you maybe something like 8-9%. Just if you basically put your money in the S&P 500, it certainly makes 8-9% returns yearly, which is good and which is fairly safe. And so that's certainly maybe for a responsible person, something to look at and maybe allocate some of their money to this. But otherwise, if you have some appetite for risk
and reward, there's no reward without risk. Right?
Yeah, you want to consider looking at Bitcoin and just look at the it won't always go up, but look at the historical price trends and how it has evolved over the years. I know for a fact that there are heavy financial players that are looking at this right now, are getting their feet wet. They are huge incumbents, and they are big institutions, so they move fairly slowly. But the thing is, once one of them makes a move, they'll all follow.
I just did a quick calculation here. So if you put $10,000 into Bitcoin now, times that by 30,000, where the speculation could lead to
30. Yeah.
So 10,000 times 30,000 is 300 million.
Yeah, that's a 30x. That's a 30x return, which you want
300 million from a $10,000 investment.
100,000, you said.
No. Because I was saying if someone put in 10,000 times 30,000.
No, times 30.
Right. Yeah. I was saying that can't be right. Yeah, 300,000. Yeah, 300,000.
Okay, I thought you were saying 100, but if you put 100.
But if you put 100, that's what I was saying.
Yeah.
100,000.
No, you'll get 3 million actually.
Yeah,
3 million. Still. But yeah.
And what kind of time period do you see it hitting that high?
Well, the thing about technology is it always follows what they call the S adoption, S curve adoption, right?
Yeah.
And so there is often a tipping point wherein it will catch fire and sort of in a matter of a couple of years become prevalent amongst institutional investors.
Mm-hmm.
I think we're slowly getting there. The problem is that, like I was saying, the infrastructure around Bitcoin is not yet ready to accommodate the type of money we're talking about.
Yeah.
But there is work in progress. For example, the Bitcoin ETF, which is an exchange traded fund that will most likely or hopefully get approved maybe this year. And once that comes in, it changes the whole game because
it's a lot easier for people to get involved.
Especially regulated funds that can only invest their investors' money in accredited, regulated financial instruments. And so right now it's almost impossible for them to get a hold of Bitcoin. And also the thing about Bitcoin is that it remains a sort of a bare cash-like asset, and so you need to secure it properly, and you need someone to manage your wallets and whatnot. And for typical like financial firms, this is something that they want to abstract away. They don't care about all the technology. They only want to they want to only invest in the asset.
Yeah.
And once these things get rolled out, I think you're going to see a huge influx of money being invested, and it's going to be a trend for portfolio managers to recommend. And you're seeing that to some extent even nowadays. Some investment banks are pulling out reports and saying that it makes sense for investors nowadays to consider cryptocurrencies, and Bitcoin being the most popular and the largest one by far, and diversify some of your portfolio in there.
Yeah.
And now it doesn't need to be 100%. It won't be even 50%. But if these people start recommending their clients to put 1% of their money into Bitcoin, these are funds that manage, again, trillions of dollars in the market.
Yeah.
And so it will tip the scale, and you will see, it's like I said the other day, it's kind of like a modern day gold rush.
Yeah,
so
I see that with technology. It's the next rational step.
Absolutely.
With the way you look at Europe and the euro just crumbling, Brexit, like just everything around the world going on with these different countries' currencies. And right now, our Canadian dollar is like the lowest it's been.
Absolutely.
In like, it's brutal traveling abroad now.
I know, that's why I'm actually happy, and most of my money's in Bitcoin because I've been seeing it rise against the Canadian dollars quite a bit. So that's another reason why I've been quite happy with my investment. But yeah, you're right. I mean, and like the institutional players is interesting. I think there's a potential that within the end of the decade, you're going to see central banks from governments all over the world. They'll add Bitcoin to their currency basket.
Yeah.
It will kind of like they do with gold or any other international currencies. They will allocate some of this, and these are publicly verifiable things, I guess.
Yeah.
And so once one somewhat major government makes a move, then again it's the same. No one's going to want to be left behind.
Yeah.
So yeah, as an investment, it is quite and that's not even discussing all the potential of the technology in terms of scalability and privacy. There are potential to revamp our entire financial system and sort of just remove the bezel that's been installed by banks and whatnot. That's sort of take their own little shave of everyone's money.
Big time.
And it will just also reduce systemic risk by leveraging this technology, so that you can try to avoid situations like what you had in 2008 by just having more proactive measures in place in terms of automated systems that are using this technology, rather than really reactive laws and regulations that will try to prevent these from happening, but then can only be enforced when it's too late.
Well, I think that's a wealth of information, and especially for people just exploring and looking to try and find where they want to allocate their money. I think we'll probably wrap up here, but any last words of wisdom to anyone looking at exploring Bitcoin before we shut down?
Well, it might not be a word of wisdom per se, but one thing I've found after some friends that have invested in Bitcoin is that if you think you're onto something, if you like the idea, you'd much rather invest now and find out more details later on than waiting to study it properly, because it is a vast and complex system. It will take you time to learn about it in more details, and when you do, well, maybe the price will be 2 times what you could have paid for.
You know what? That's exactly why tomorrow I'm going to try and finalize this deal here, because I know if I don't finish this deal for land now, I come back in 6 months, it's going to be higher. You know, it's just how it works. You know, we talk about taking advantage of opportunities, and if it makes sense, sometimes you just got to jump in after you do your due diligence and you're comfortable with it. But if you're just on the fence, then you're never going to get in the game.
Absolutely.
You know?
Maybe the word of wisdom would be this ancient Chinese quote, which says, "The best time to plant a tree was 100 years ago, and the second best time is now."
I love
so
it.
Act on it.
That's great, brother.
Cool.
Thanks, man. Thanks
No
for taking the time
problem.
here.
Pleasure.
And hopefully you enjoyed that. And maybe we'll do a follow-up in a few years when it hits that high and you're buying a whole island instead of this. All right.